Hello, hello, hello. Welcome to Our Stock Trades. Or should I say ho, 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 right? I got some decorative things in the back here. I really like Christmas. We're celebrating it, I guess, in November, right? It's about time. So I hope this video finds you in great spirits. And in this video, we're going to go ahead and talk about, what determines a stock market bottom and how can you use the bond market to help you predict a stock market bottom. Okay. So, oh yeah, most definitely, and we have so much to review in Clove. There's so many different pieces to talk about. So we're gonna scatter those videos out. So what I like to do here, and this is a live, so we can have a little discussion here. Is I something interesting has happened within the past 24 hours. So the CPI, Consumer Price Index, came back, and it was so good that I must say, um, who would have thought that a consumer price index of 7.1 was it? Please correct me if I'm wrong. What was the consumer price index? Around 7%. Who would have known the market would rally of a CPI report of 7%? Who would have thought? If I would have told you this 3 years ago, you would be like, "You're crazy. You're get out of here," right? Um, well, the reason why reason why the market's rallying right now is that many business investors are looking at it and saying, "Well, we are seeing the inflation report start to cool down." Okay. We are starting to see that right now. Could this, inflation likes to peek its head really, so one report is not enough. When we need consecutive, I would say, before I would say two reports. Now I'm like 3 to 4 reports, right? So, but here's the thing. We are starting to see it go down. This is a very, very good news. But most folks, like for example, yesterday we saw the NASDAQ rally up 5%, right? And most folks are focused on this. Well, an experienced investor does not focus on the movements of stocks. No, an experienced investor looks at the bond market. Now, what is the bond market? And let me just show you what I'm talking about. This is what I'm looking at. I'm looking at the 2-year, I'm looking at the 10-year, and I'm looking at the 30-year. Now I showed you this because it's you can easily look at it outside of YouTube. For all of our members, it's inside of our course, and we explain exactly uh, um, what it means. But in this video, I'm going to be teaching you what is it that I'm looking at. So, like we talked about, if this is the first time you're joining us, please subscribe. We'd love to increase our community, which likes to bring the truth, no hype, just pure market analysis here. Uh, we like to look as business investors. We like to look at the 2-year as a prognostic factor of the federal funds rate. Now, what the hell does that mean? Let me explain. We like to look at the 2-year to determine what in the world is the Federal Reserve going to raise their darn federal funds rate, aka their interest rates. Okay. So yesterday we saw something funny. Once the CPI rolled out, we had a 2-year treasury of around 4.6%. And if you look at the former federal funds rate projection, it was around 4.6%. All of a sudden, it dropped. It dropped like a rock to 4.33. In fact, let me go ahead and kind of reload it. You could see in 1 year, you could see how much it rose. In fact, look at all. Good way to see it, right? But we are seeing in the past 5 days, we saw it drop like a rock. You see, most folks look at this. Sometimes you got to look at that little drop right there to tell you the story. Okay. So, if you look at the 5-day, there has been a drop on the 2-year. That tells me that the 2-year, the bond market is predicting that the federal funds rate and the feds may not stay course, or they're not confident that they're going to stay course and continually increase the interest rate. Okay. And again, it's not black and white when it comes to investing. It comes in flavors. And you, as an investor, You need to use your experience and knowledge to take multiple sets of data to come up with your own conclusion. If you look at the 10-year, it went from 4.1% down to 3.8%, as you can see here. 30-year went from 4.3, 4.2, down here to 4%. So what does this mean? What does this mean? Well, it's telling me that the market thinks that we're slowly nearing a bottom, that the Federal Reserve is going to have to stop the increase in interest rates. Now, the Federal Reserve can come back and do another increase in rate hikes, and that'll really cause the market to really get scared. But what is that going to do to inflation? It's going to curb it down to their 2% target rate. Most likely 3 to 4%, right? What is this telling me now as an investor? Well, I still believe value is going to outperform growth in the short term in terms of free cash flow. Profitability is still key. It's still king. If you're not profitable, then my friend, you're going to have a big problem, which is what Clover's trying to do right now. You're trying to get that profitable growth. And what other companies that I'm looking at that we're going to be adding into the price target list, okay? Let me go ahead and take a look at the comment sections. Absolutely. We'll definitely do. We're going to have to do multiple sets of videos because I really want, I've realized that I'm one of the only videos that talk about Clove. So I want to, cut them down and really focus on each section of them. So yeah, we're definitely going to do that. Absolutely. We're going to do a trend analysis, definitely. And then you're part of our group mastering, I think. So over time, once the videos roll out, I hope that you can get to this level so you can break it down too, because it's all math. You know what I mean? You'll be able to do it easily. Do we think this is the bottom for Clove? It depends. At this rate right now, it depends if inflation is truly, obviously it's peaked, but if it's truly done, is it going to go down? So that's number one. We need more consecutive reading reports that inflation is going to go down. Number two, of my expectation, if this growth Clove has bottomed. The second thing I'm looking at is, are the Federal Reserve, the feds, are they going to start monetary easing or decreasing interest rates, or are they going to sustain their 4%, 4.6% federal funds rate benchmark? How long are they going to keep this in place? I think they're going to stop raising and they're just going to keep it there until inflation tucks its head, right? The third thing is, when are they going to ease? As soon as they ease, stocks are going to jump like you have never seen before. Okay. But this is the thing that I just find so mesmerizing. Just a couple days ago, the stock was around $1.20 something cents. I've seen so much negativity. People were saying, "Oh man, this is terrible company, terrible." I've received so many comments about how bad it is. Some guy tried to even troll the Reddit group, Jesus Christ, by saying, I was messaging. I don't know. Oh, God knows what was happening. I thought it was funny, but we cannot see you. You can't see me? What? How about now? Oh, you can't see him fine. Okay, good. Okay, good. Sorry about that. I saw this. I was like, "Oh no, I'm sorry." I just find it. I think you might have to reload the page, Dr. Pro. I find it interesting how the market is just so. The biggest advice that I can give you is reading those two books. Okay, Intelligent Investor and Security Analysis. It is the psychology of the market is so intriguing and so interesting that people like to buy at extreme highs. I don't get what kind of investing is that. I never understood it. And I was like, maybe I could change some people. And we have. We've definitely changed, and we were able to educate retail investors. But I must say, um, looking at how the United States Economic Forum has just brainwashed retail investors. If the price is low of a stock that's dropping, it's a crap stock. But if the stock price goes up, it's a wonderful stock. The American system has brainwashed these people into just looking at the price and not actually ascertaining and asking more questions and to ascertain the value of a company. No one does that. So whoever's watching these videos, and who's, you guys are ahead of the game. I could tell you that you guys are ahead of the game, and it's sad because so many people sold out. Imagine the people that are going to regret what they have done in the next 5 to 10 years. It's going to be insane. You're going to see those stories like, wow, I sold out at $2. I bought at whatever dollar. Oh, I feel so stupid. You know what I mean? But it is what it is. It is what it is. That's just what gets me. I'm just like, wow, but it's just so clear to me. And I'm just trying to find a way to teach it in a way to make it clear to you all. And it's been a challenge, I must say. I've been teaching for over 15 damn years. I've been teaching for so long. Since I was a kid, I was teaching. And I've been telling you, this has been a very difficult. Retail investors, I'm sorry. It's been hard. It's been hard. It's hard to reset a system that's been engraved in how people view things. Now, if you go ahead and look at smart money, dumb money, you basically start seeing that smart money's starting to go down, which means that they're laying off because they bought really high when the stock was low, right? They took advantage of this low. They bought near the $1.28, right? They took advantage, right? Now, dumb money's going to come back, and they're going to end up riding it up high to the sky, right? We don't know. This could be a double dip. We don't know yet. But it is, if I was to quantify this, and as if I was to kind of, how when we ask patients how, your pain level from 0 to 10, it's obviously subjective, right? My subjective analysis, based on no mathematical modeling of how I feel, I can say that I am more confident that we are nearing a market bottom than I was last month, right? And I feel like this is consistent with all of you folks. I believe you feel that too, that we're almost halfway there, if not more. Comment down below what you think. All right. So let's go ahead and see this. The work you're doing is God's work. You're literally giving guns in people's hands against people who are already equipped with an army. I get that. I get that. What, ladies and gentlemen, we're the amount of money we're spending to give retail investors this information is a lot, right? And it's honestly a privilege and honor to be that type of information to really change someone's life. The information on how we analyze companies and teach people how to invest by utilizing Benjamin Graham's ideologies into the contemporary times. It's I must say we really are. I do believe I am doing God's work. This is it is true. I do believe that, because most retail investors just look at price and don't look at the company. Exactly. They don't. Most retail investors don't even know what an earnings report is. They don't even know what an earnings call is. Yeah. Oh yeah, no, I've never had my money in FTX. I mean, why would I want to have my money in a company that's in the Bahamas? There's a reason why they're in the Bahamas. There's not a lot of regulation in the Bahamas, right? You know what I mean? But again, this may be for some folks, maybe they haven't even looked that far, or maybe they said, it's okay. No, of course not. I would never invest in a company in the Bahamas, right? Right. We're going to start seeing that. I wouldn't call it a trend just yet, but in the future, not just in healthcare, just in general, ladies and gentlemen, we're going to start seeing that companies that don't disrupt and don't innovate are going to become dust. we are slowly returning to normalcy. Something interesting is happening in the election. I don't want to call much, but we're starting to get a hint that a former politician may not be possibly the ideal candidate that America wants. That one party in particular must reinvent itself back to and let's just put it that way, right? Let's just put it that way. I don't want to get too much into politics, right? Okay. Good. Clove just hit 150. Great. I'm very excited that we're moving out of that 126. But to be quite frankly honest, I'm also sad too, right? Because $1.26 is not. I mean, we're people that are on this channel that are going to follow us through until the stock goes 20 plus. You look back at these videos and I'm like, man, I miss those prices, right? Okay, but don't worry, there'll be more stocks after that. There's always opportunity in the market. Okay. But in any case, the bond market is a lot bigger, approximately, I don't know, 2 to 3 times bigger than the stock market. So the bond market I like to use to predict the stock market. Okay. That's what I like to do. Again, it's one sliver of data that I look. There's a lot of pieces of data. You guys know if you're in the mastering course. Speaking about that, we are having a Black Friday off coupon code down below, Black Friday, which gives you $500 off. It's one of the biggest sales we're ever going to have. Okay, so definitely take advantage of that. Okay, so there's that. And I just wanted to just point this out to you guys. Just, whenever you look at the stocks, yes, you can look at the futures. Yes, I get that. You can. But just don't neglect to look at the 2-year, the bond rates, the 10-year, because the 2-year can predict the federal funds rate. I'm thinking here, federal funds rate. You could put CNBC here if you want. I'm sure they have, about 3.25 this week for. So let's see if we can find it. We have it in our mastering, but I have to log in. Yeah, don't even worry about it. Anywho, the 2-year predicts the 4.3, right? Sorry, the 2-year of 4.3 predicts that where the federal funds rate is expected to go. And I mean, you can go ahead and retract this. We can go back 5 years, and we can remember the pandemic. We were around 2.81, and the feds were easing, and all of a sudden the pandemic happened, and look at that. The federal funds rate just dropped near zero, right? Right. So remember, guys, there's a lot, and just look, and I want you to graph stocks within this range to this range. Okay. They exploded to the moon. So just keep in mind, look at the bonds. Most new investors, they don't look at this. They don't know what this is. Okay. I want to teach this to you. I want to put this, I guess, the metaphor of a gun. I want to put this in your hand so you can use it when you go to war. Okay. All right. And you can also look at bonds and you can do technical analysis on them and go even deeper. Okay. All right, guys. Love each and every one of you. We're going to go ahead and talk more and dissect Clover Health. And we're going to continue moving the stock alerts forward, do the price targets, and just continue moving forward and building a place, one-stop shop for retail investors, in a group. And honestly, the group is where the value is. I had many of our members say, you know what, man, if I didn't have this group, I probably would have sold out a long time ago. And I get it. Trading can be lonely. You go out there and outside in the world and you talk to people about stocks and they say, oh, it's a gamble. Oh, it's this. Oh, it's that. They're like, oh, what are you doing? Oh, you lost so much money. And you get all of these, you hear all these voices, and, if they're so consecutive and they're so repetitive, you start believing in them and they start becoming a self-fulfilling prophecy, which is why retail investors lose. So I always think about that, and we're going to continue being here and, shedding some light on the market and looking at, people looking at CPI and stocks. I'm like, look at bonds, right? All right, guys. Love each and every one of you guys. Remember, put God first in everything you do. Stay healthy and enjoy Veterans Day. And thank you for all the veterans that have made this country one of the best countries ever. And I hope that you can enjoy my little Christmas decorations in the back, trying to make a little fun for you guys. I don't know if you can see them here, the little Christmas lights. All right. See ya.